Hey, what's up, everybody? Wednesday, February 5th. Not a whole lot to talk about. You know, I check every day on the daily Treasury statement and I compile my data to see if we're starting to see any sort of a deceleration in the fiscal flows. None whatsoever. They're just, trend is going up. So as long as that's the case, I stay bullish on stocks. You know, I guess you could say bullish on gold. I think a really interesting thing to look at right now is oil. I mean, oil's come down. If you remember when it got up to $80, I said it's not going to last up there. You've producers consistently selling. They've been selling from 72 all the way up, and they were really selling up around the 80, 78, 79, 77 to 80 level. We're back down here at 71. It's a good buy down here. Oil's a good buy down here. We saw, even though there was a significant increase in crude inventories in the latest EIA data, starting to see crude exports pick up again. They have rebounded to the highest level in 6 months. By the way, that has some implications for the dollar too. I'm not going to get into that here because my subscribers know about that. I sent that out. As you know, I went short the dollar against the yen. That's doing very, very well. But I think I'm about to take my profits in the yen pretty soon. I also bought the Canadian dollar, what was it, on Monday when it got whacked like 2.5% on the Trump tariffs, and that has rallied very nicely. I took a nice profit on that Canadian dollar. So there's plays to be made in the short term without question, all right? If you understand policy, if you understand market psychology, if you understand the flows, etc. So one of the things that I found interesting today is Treasury bonds. Yields on the 10-year came down into the 440 handle. We haven't seen that in a while. And we had one Fed member, forget who it is off the top of my head. It was a Richmond Fed president. Forget his name. Anyway, he said Fed is leaning towards rate cuts. So I found this very interesting because, Powell, he's been opposed to Trump. Trump's been saying we need lower interest rates, and Powell said we're going to hold. And in his press conference after the last Fed meeting, he was very, staunchly communicating that the Fed was going to stay on hold. That's pushback. To me, it looked like pushback against Trump. But Trump is winning, man. Trump is winning all over the place. And you're starting to see, at least today, I saw that one Fed member who I just mentioned saying that we're leaning towards cuts. The pressure is going to be on Powell, and Trump's going to win out because he's got the mandate. He's doing a lot of things now. He's moving ahead like a steamroller. And I don't think that Powell, by the way, for me, here's the thing. He said back, and I think I might have mentioned this on my last video, I'm not sure, but if I didn't, here it is. Back in 2019, when Trump was also putting tariffs on China at that time, Powell said that was gonna create significant headwinds. Not that it was gonna create, he even said we're seeing significant headwinds from that. So back in 2019, when basically Trump was doing the same thing as he's doing right now with the tariffs, Powell had a completely different point of view. He said that there's headwinds from these things, meaning that it slows down economic growth. And now he's saying we got to be careful about cutting interest rates because these policies are going to increase inflation. So you see what he's doing there. First of all, once again, he's flip-flopping on that view, but I think he's flip-flopping on that view because he's very much tied into these Wall Street hedge fund guys who have been touting, I don't know if they're still short, but remember last year they were all touting their short trade in treasuries, which probably worked out well because when they got in and then they started talking about that, everybody started coattailing them, and treasuries fell, and I'm pretty sure they probably exited their shorts. But if they didn't, Powell's running cover for these guys. That's what I think. But we're starting to see, at least from this one guy at the Richmond Fed, that some of the opinion, some of the outlook is turning against what Powell is saying. And I think we're going to start to see that among more Fed members, because Trump is winning right now. He's winning in the sense that he's getting things done. He's pushing ahead, whether you like it or not, whether people like it or not. He's not sitting there in the Oval Office doing nothing, lethargic like the other guy was. Like, he's making moves. The guy's making moves like a freaking steamroller. And again, it's going to piss people off. I know it's going to piss people off, but the point is that he's making moves and people want to see action, okay? Some people maybe don't like the action, but the fact of the matter is that people like to see action, and to the degree that these moves garner more support, not just from the general population, but from people in policy circles, that's going to be pressure on Powell. And it's not a surprise to me, and it doesn't seem like a coincidence, that we had a very sizable drop in the 10-year yield today, where actually the economic data was pretty strong, okay? We had payrolls, ADP payrolls, came out, I think, of like 180K when it was supposed to be 146 or something like that. So it beat the forecast, all right? So, and the market opened up weak, and then it rallied. Dow closed up 300, I believe. S&P was positive. I think the NASDAQ was kind of unchanged. We had some drag from Google, which, by the way, I bought Google today on the open at 193. So, and I think I mentioned this too, that there's a record short position in the 10-year Treasury ETF, that TLT, that's the symbol. Record short interest in that thing. So you remember back when we had the meme stocks, the Reddit, what was it? We had GameStop and we had AMC, where those stocks were heavily shorted, and then that Reddit conversation triggered off a massive short covering rally. You got a massive short position in TLT right now. Like, everybody is bearish on treasuries, and that's signaling from Powell. That's signaling. I mean, inflation is moving in his direction. Oil prices have come down. Gasoline prices have come down. He knows that. He sees that. But he's out there. He's putting that out there because he's running cover for his hedge fund friends. That's what I think anyway. And I think it's hard to argue against that. I really do. Because the numbers are not kind of bearing out what he's trying to tell us. And he has guys on his own, members of his own committee, that are saying, like, yeah, we're leaning towards rate cuts. So that's what's going to happen. And I'm telling you, when they start, all it's going to take is a shift in the language by Powell. Not even that the Fed has to cut. As soon as Powell mouths the words, we're looking at potentially more rate cuts, that short position in treasuries, and by corollary in the TLT, that's going to blow this thing through the roof, man. It's going to blow this thing through the roof. Separately, I just want to mention that Congress is still working on a spending bill, which they have to come up with by March 14th. The House is, the Senate's taking one up now because the House has been kind of dragging their feet on this thing. But it looks like the fiscal hawks in the House, they're talking about $2 trillion to $5 trillion in cuts. Okay? Of course, that's their starting bargaining position. But Steve Scalise, who's just under, Mike Johnson, he's saying that $1 trillion is already on the table. $1 trillion in cuts is already on the table. We don't know how much the tax cuts are going to be, but I'm telling you, I don't know if you guys remember, but last year I said 2025, is going to surprise a lot of people because everybody was bullish. And I said, it's, you got to look at what is on the docket. And, we had a smaller increase in cost of living adjustments for Social Security and those things. I've been talking about that. We had the rate cuts, even though that's paused. We got spending cuts that are coming. Yes, tax cuts are coming too, but we don't know the magnitude of each. Right now, the magnitude of spending cuts looks pretty large. And I said, we're going to come back and we're going to revisit this. And I said, all those people who were super inflationistas and bearish on treasuries, we're going to come back and take a look at those calls. Because I was the one out there by myself saying, be careful what you wish for, folks. With all these people saying we need cuts and spending and we got to shrink the government and this and that. Yeah, maybe we do. But you also have to understand the economic ramifications when you do something like that. And these people, I crack up because Elon Musk, maybe he's well-intentioned, but when he says, we're going to cut $4 billion a day, and this way we're going to reduce the deficit, and we're going to have 3% economic growth, I'm like, how in the hell do you come up with that? I mean, that's like ridiculous. That is ridiculous. Government spending is the second largest component of how they calculate GDP. And what I always tell you, it's the core thing. It drives everything else, even personal consumption expenditures, because people have to have money to spend. And that government spending is what puts the dollars into the economy. So you can't make those dramatic, draconian cuts and then at the same time, out of nowhere, he's saying growth is going to be 3%. No, growth is going. You're lucky if it's going to be negative 3%, Elon. You'll be lucky. So anyway, that's it for today, folks. Please like and subscribe if you've already done that. Thank you very much. I'm trying to get 10,000 subscribers. I still got a long way. I'm trying to get 9,000. I think I'm like 50. That last 50 has been killing me, man. It's taken forever. What can I tell you? And don't forget, go to my website, pitbulleconomics.com. Sign up for a 30-day free trial to MMT Trader. See you tomorrow. Bye.